Mm, Good morning, good afternoon, good evening, wherever you are. So it's about the time. Let's see where we're selling. This is going to be a quick one, but it's just giving you a headline on exactly what we're looking at, and what's the current state, and what the big institutions are doing currently, globally, I would say. So first of all, most of you are familiar with something called Blackstone. Sure you're familiar with that. So just imagine for a second, what does it take for one of the world's largest investments found commit over 1.5 billion to a single country? Think about it for a second. Is it a strategic move? Is there something more to that? I think this is where we're going to be diving a little bit about it. But remember, we're not trying to follow a short-term trend. It's not a speculative bet over the rising skyline. It's not. Okay, so you look at the dynamics, suddenly it's not another real estate deal. So uh they're not buying buildings or this or that. They're getting into something bigger. So let me paint you a picture. 1 year ago, that is in 2025, Blackstone announced over 1.5 billion investment in the United Arab Emirates. What does that mean? See, for investors, the headline figure is only the beginning. But there is a complex that you guys want you to understand that you've not joined this one of these workshops just for us to talk to you about, okay, this is that stuff, this is what it does and stuff. No, there is more. All right. So because when global institutions of this scale commit capital to the UAE, it's not simply betting on one building, one sector, or one moment in an economic cycle. But remember, when money moves, as a narrative keeps coming up, like if you want to make the most money in the world, follow where the money is. So if money is going in a certain location, it means that's a big deal. Something's happening there, right? Brilliant. So it's making a much broader judgment based on the fact that, you know what? Yeah, in this city, in this country, in this nation, this is how much we're putting in. But it's not just how much they're putting in. It's the future output or the return on investment for the judgment that they made, right? So I want you to understand something that people don't see about financial markets and institutions like BlackRock, right? So financial capital is different from speculative money. You know, all that means, some people just speculate, oh, money is going to be here, money is going to be there, money is there. But when money starts moving, because a trader can enter a market because momentum. A short-term investor can chase a trend as you been aware of some of the actions that have been done over the past. That most of you have made the most money, others have lost money and all that, right? But it doesn't matter. Most important question that you get to ask yourself, how stable is the economy? How predictable is the regulatory environment? And how resilient is the financial system? And other questions that follow, can businesses grow here over the next decade? And perhaps most importantly, can capital be deployed at scale? So why we follow this function? We follow this function so that we understand that deploying capital at scale gives you bigger win than earning to one single asset or putting money here and putting money there. You put money in a system that is able to filter out, okay, we allocating portion of this here, portion of that there, maybe in real estate, maybe buying businesses that are failing or getting into franchise businesses, perhaps buying plots of land and building or becoming developers per se. But remember, I constantly tend to remind you that we'll get into another workshop where we dive deep into understanding, okay, how do developers make the most money in the market? Right. So if we're allocating capital, it's not just into one structure, it's bigger than that. So just imagine for a second, Blackstone's decision to invest in the UAE sends a powerful signal that the country is no longer being viewed simply as a place of rapid growth, right? So it's increasingly viewed as a platform for long-time capital appreciation. So that means you as an investor, everyone who's on this call is basically regarded as an investor. But let's dive a little. away for a second. Studies have it that a person who earns at least $300,000 a year is considered as an accredited investor. So you have to calculate, okay, how much are they supposed to earn monthly? And what are other taxes that what are the tax deductibles? And also after the tax deductibles, what else are they engaged in that takes a portion of the money? And then what's the take home figure for that, right? So you look at one of the two things because many a times people miss validations to where capital is flowing, where money is moving. Remember, this community is not about okay, buy properties, real estate, and all that. No, it's about asset allocation. It's about structuring. It's about building portfolios, growing moments that guarantee that yeah, you're making money here. You're not going to make money here, all right? But the most message may not be even the size of the investment. It's about the timing. So this was 1 year ago, right? Couple months in, and then there was sort of disruption. I did not stop the transaction from happening. Could have been real estate. Businesses were that was the opportunity for people that allocated capital were supposed to get in. We've had a couple of conversations with most of our clients that are like, you know what? Yeah, that was a good time to go businesses for cheap on a dollar. They've not really thought into buying properties per se, but I'll say single standalone properties make sense to some, others don't, because they're not going to make the money. Like I constantly tell you, if you come to me, you paid me, or you go into a one-on-one consultation calls with us, I'm not going to walk you through, okay, yeah, there's this property here, there's that property here, there's this community, buy here, buy that. No, no, no. You have to look at the bigger picture. Where does money make sense for you? Is it buying a business? Is it buying a home build? Is it buying a complete location? Like 3, 4, 5 towers in one location. Is it where money is? You get to ask yourself questions that really make sense. Because remember, if it's about the timing, then just know for sure institutional investors do not typically make their largest commitments when everything else is certain. Because the one thing that matters most is when they believe that the fundamentals are strong enough to withstand certainty, it's when they're able to move their money. Because now the safety allocation is in place. It's no longer, oh, maybe this will go wrong or maybe that will go wrong. You bet against the positives, not the negatives, right? I know the fundamentals come up, but where are your analytical compass towards what you're putting money in? Because what makes major investment decisions to be one of a kind in most cases? It's a vote on the country's institution, vote on economic direction, and also a vote on the ability to attract talent, business, capital, and global connectivity, which is why UAE offers at the moment. I'm not only talking about UAE, but there are also global hubs out there that offer the same concept. All right. So that tells you, yeah, we're getting somewhere. And that tells you, you know what? Yeah, this is a strategic move that everyone else should be concentrating on. So when you look at the entry and market signals and the confidence there is, these are the most important things that really, really make sense. Because Blackstone's significant capital deployment in the UAE reflects confidence in the region's economic fundamentals, geopolitical stability, despite the regional tensions. So you look at the investment scale, strategic rationale, and the timing significance, something that I already mentioned. Timing is very important. Uncertainty is carved out all the way, and then decisions are clearly, the noise is filtered out. So they're only concentrating and looking at the signals that make sense for them. So yeah, all in the chat. If you agree with me on this, we may have a couple questions that you might have. So okay, put the questions in the chat and then we'll see. Brilliant. Type a 1 in the chat to see that everyone else is following. If for any reason there's something or you're not able to hear me, please also put it in the chat. Kim will be able to take care of most of the questions and the important thing. We'll be able to measure exactly what's going on and stuff so that we're able to make sure you get the most value out of this. So we look at the investment angle towards political stability, economic resiliency, capital accessibility, and regional hub status. So let's look for a second and consider a location in Dubai, DIFC, right? It's the Wall Street of New York or yours. It's where markets move the fastest, right? And the people that in these locations are thinking, okay, so what do we connect on that matters the most? So if you connect this to the property market, connect this to the office market, if you connect this, everything has data because according to Knight Frank, this estate deals volume tripled for the last 2 years. And at first glance, it looks like a simple demand story. More companies, more employees, more offices. Yeah, maybe. But institutional investors see something different. They look at infrastructure underneath the real estate, the businesses moving in, the capital flowing into the country, the connectivity and the regulatory environment, and the long-term ability for the UAE to attract international economic activities. So look at all these factors there. There is an ecosystem around it. So it's not just throwing money in and thinking, will it make sense? Will it not? All right. So if you look at most of the other highlights when with the deal structure, you're thinking, is it really something that's worth it for me? All right. Because remember, let's say over $250 million are put into advanced digital gaming technology, an app database payment, and intelligent platform. The deal structure seems like a minority structure. Like, is it really something that they should be putting money in? You know, because when you become a capital allocator, you now have 1% top thinking of what investors are thinking. Because you can be an investor where yeah, every deal that comes to your end is important deal, you can take it or not. All right. And then when the moment you do a couple of deals, you're going to have the wins, you're going to have the losses, right? Then at a particular moment, you're going to have even have grown a mindset that pushes you to just become a capital allocator. When you see an opportunity somewhere, you look at the uncertainties, you look at the certainties, sort of pros and cons, and then you're like, yeah, this is where it makes sense. Because remember, most of you that are making money right now have followed the money or have followed where the money is moving. It's not a cliche whatsoever. Yeah, you're going to hear people telling you, I follow the money and all this. Yeah, there are dynamics towards why you should follow where the money is going because that's where demand is and that's where attractions or influences people moving in, people moving in the most. There's demand for almost everything else. You get it? So you have to think like a financial institutions, not just single-handedly, yeah, I have a couple equity on me, so I rather just do this or do that. So remember, the most important distinction is Blackstone investing in the UAE does not mean the market has no risks. There are risks, right? Doesn't mean that every office building will perform well, and it also does not eliminate the possibility of oversupply or changing interest rates, or perhaps shifting global economic conditions. In fact, institutional investors are often more focused on risk other than anyone else. It's very vital, it's very important. So risk plays a very major role in our decision making. We don't just get in and be like, you know what, this makes sense and all that. We try to also look at the factor that, okay, but everything else, if this is a good deal, and we're willing to put money of, for our clients or investors, does it make sense to us? Does it make sense to them? What's the, we call it the risk strategy around it. So if we to lose a bit of money, how much are we willing to lose? And if we are certain about the market, how much money is it going to get us? Right? Yeah, I see in the chat. Yeah, it's making sense for most of you people. Brilliant. Brilliant. I'm glad it's adding more value because that's what basically we agreed upon, making sure you get more value for everything else that we're doing. Like I say, this is going to be a short one. Then we're going to also look at the entry, another accusation that also makes sense. I know, like I said, you follow the money, you follow the structure, and then before you know it, you have all the information that you need. You filtered out the noise. Now you're following signals that are out there, signals that we pull in our community, and most of the information and the deal acquisitions that we have using our platform to be able to cross-check or have a checklist of this is a no and this is a yes. So I'm willing to, this is a deal, this is a dad. So you don't waste more time other than that, right? So it saves you the time on the premium that, you know what? Yeah, I'm only concentrating on this. I'm taking that. Right? Because you'll be, maybe some people are looking, I should be buying properties at a cheap price. That's $1. Yeah, it makes sense. But also you look at the long-term value. If you buy on a cheap, what's the long-term value? What's the demand growth in that location? Right. If you're buying a business, what are you looking at? Because we also get into structuring businesses that you can buy anywhere in the world. It's simple, easy, super, right? Without you even killing time on a dollar. Because remember, time is more valuable for you people. Time is valuable for every, almost all of them, majority of them. And everyone here who is in this workshop, time is an important asset. So look at the real estate platform, the market size, because look at Pamela and Blackstone, who jointly invested over 525 million in property finder, and a Dubai-based platform, and one of the Middle East's leading property marketplace. Think about it for a second. What are they investing? What are they putting their money in? So from an institutional point of view, are they buying real estate? Maybe yes. Right. I want to break something out for you clearly so that you can understand. If you look at the investment size, you look at the asset class, it's commercial real estate and platform or technology or what. All right. So I want you guys to understand one other thing. People investing money into these platforms and all this property finance for margin and a backed up investment where joint financial institutions are putting money down, it makes a whole lot of sense because the scale of Blackstone's real estate exposure into the Gulf market means there's something that other people are missing. And you don't want to be part of the people that are missing such opportunities like this. But what are they putting their money into? Something that I need you guys to understand. It's no longer an investment about properties. It's no longer real estate. Their certainty is in the data that gives them exactly the proportion or the compound effect on exactly where is the market going? What can we do about it? Right? So as simple as that, plain and simple. So you look at it, yeah, they invested into Property Finder. Property Finder is a directory, a data platform. They're buying into information and not just buying properties. All right. So having said that, if you look at the broader strategic implications for this makes sense, and all the other things around, which is something that I think we'll get into little shortly. So let's take a break and then shoot your questions in the chat, and yeah, we'll connect back into this and then go through it all, and then we'll jump into the next thing. All right. I think we should take a 10 minutes break. Questions, shoot in the chat, and then we'll continue from there. Brilliant. Bingo, okay. Yeah, all right. Sure, for a bit, and then we'll continue from there. Right. So, Blackstone's UAE investments reflect the global, like the economic structure of the ecosystem was what runs UAE as a right? It being the largest alternative asset manager with over $1.3 billion assets and the scale advantage, portfolio diversification, sector focus, and long-term positioning. So what does that mean? That means Blackstone is something that has made most money investing in real estate, private equity, and asset allocations. And it's also very important that when you understand the distinctions, right? then you get to see that, you know what? Yeah, there's been a shift, and this is what's really causing the shift. So we look at the transformations here. Blackstone investing new doesn't mean that market has no risks. We already know that. There's changing interest rates or there's global economic conditions that change. Institutional investors almost focus on risk other than anyone else because they know the amount of capital allocation that they manage gives them a bigger advantage. It also keeps them away from non-making the most useless decisions. So for large investors, predictable risk is often more attractive than predictable returns. And that's this for people that have lots of volume. I feel like, you know what? I can predict when I'm making the most money. So you heard stories about overnight crypto millionaires and stuff. This is the concept. And now it's being used by just solutions like Blackstone, which gives you a bigger overview of exactly what's going on. The UAE's transformation isn't there for not only about investment, it's about becoming a destination for increasing sustainable life. That's what that sounds all about. And that's what this investment thesis makes the whole bit of sense. Why would they even put all this time capital in a place like that, right? So if you could ask yourself a few simple questions, like how fast can this market grow? Sure, most of you might have a few ideas in the mind for stuff, right? Actually, just a quick one in the chat, type one if you my voice is loud enough, if you're able to do it. So that answers exactly where we are. Yeah, this one's coming up. Brilliant. Okay. Yeah, okay, that makes sense. So the most other important question that you get to ask yourself, can this market remain relevant for decades? Well, Blackstone's investments is powerful because it represents more than capital entering the UAE. So I don't know if that answers your question. It also represents capital making a judgment that wouldn't put this money elsewhere, other than a city or a country that is bound growth, other than this time, right? So can this market remain relevant for decades? Yeah, we've seen that. And also we've understood. If we look at 10 years ago, how Dubai looked like and the things that are in place, what it is currently, you'll be amazed. So it feels like it's a safe bet for Blackstone, and also that the UAE has the stability, infrastructure, connectivity, and ambition required for global investment at the highest levels. So the real question here is, how do I know the right signals, right? Because the most important signal in the market is not always about what prices are doing. Sometimes it's who is willing to commit to capital. And when one of the world's largest firms makes a major commitment to the UAE, the message is clear. UAE is no longer simply asking the world to invest in its region. Increasingly, the world is most sophisticated investors are making their own bet. And that's the best way because that's where it puts us. That's where the future is. So, like I said, let's answer a couple questions here. So, which questions have come up? Kim, if you could jump on real quick. Thing. Yeah, it looks like you on mute. Can you unmute yourself? Yeah. Okay. I saw one question in the chat. Yeah, you can shoot as many in the chat. Also, hand a few, and then we'll see how to get it out from there. So the question is, one other question would be, does a 1.5 billion investment from the UAE has no risks? The answer to that is no. And that is precisely the point. Serious investors do not invest because the market has zero risks, which is something that you guys need to understand. Because I've also had conversations with people on calls are like, yeah, I'm looking for a market that is not risk averse, a market that where I would increase my money and all that. Risk is everywhere. And if you've attended most of these workshops, you understood that everything in life is a gamble, and everything that has risk attached to it is a bet, right? So they invest when the risks are identifiable, manageable, and balanced by long-term opportunities. So they're not investing for short-term; they invest for long-term opportunities, right? I don't know if that answers your question. Another question that's coming into the chat: why would Blackstone invest in the UAE? Yes, there's a short version to the answer. There's also a long version to the answer. So the short version is, would you not invest in UAE if you had a chance, if you had this capital allocated somewhere other than it being seated around? Okay. But let's say because UAE is no longer just a high growth market. All right. Just to answer your question, it's becoming a long-term capital platform. Blackstone's decision reflects confidence in countries' economic resilience, infrastructure, and to put it, connectivity and ability to attract global businesses. So you look at locations like the IFC, so investors have private equity firms. We have bigger brands, Microsoft, IBM, Apple offices in Dubai, Tesla offices in UAE. So what does that mean? That means the economy is tightened by the global response of these businesses that are in here. Okay. So another question was the other question? Let me see. So another question is coming in saying, what's the most important signal? Okay. All right. So the most important signal isn't who is investing or how long are they willing to stay. Because remember, like I said, with comes to Blackstone, they're investing long term, not short term. So the short term investor may be chasing momentum, which majority of all the people that are getting into real estate and all, they're chasing momentum, trends, shiny brochures, better payment plans and stuff. All right. The global institution investor like Blackstone usually asking or keeps asking a much bigger question. Will this market still matter 10, 20, or 30 years from now? And the answer to that is absolutely yes, because there's no capital allocation to such a city or a country, or a nation, if the long-term goals are not checked. All right. So what's the other question that has come in? Why does this matter for Dubai's office market? Okay, that's a very brilliant question. Because office market demand is not created by buildings alone. It's created by companies, capital, talent, and economic activities. All right. As more global businesses establish a presence in the UAE, the demand for high quality office space has also deepened. I hope that answers your question. So let's hear from Gabriel. Gabriel says, what does Blackstone know that smaller investors may be missing? Gabriel, thanks for the question. Just to give you a bit of a hiccup, Blackstone is looking beyond today's headlines. Its investment thesis is likely focused on the UAE's long-term fundamentals, population growth, business expansion, infrastructure, institutional development, and the country's role as a global economic hub. So I hope that answers your question. So I think I'll take the final question that says, does Blackstone's investment mean every UAE property is a good investment? Absolutely not. It doesn't. Right. In fact, position capital can make market more selective. The best assets may attract more capital while weaker building face increasing competition, which we've seen happen in the past previous couple of months. Yeah. So when we look at risk management and conviction, we've already pulled a couple of things. So geopolitical insulation is a very important part that UAE's position provides relative stability within regional context, diversification strategy, splitting capital between fintech and real estate, reduce sector concentration. So this is also a structure that has been able to be put in place. Something that is phenomenal, something that is working for majority of the institutional investors and also the new investors that are coming into the market. This is a thing And also the other thing is the institutional quality. Both deals target market blending and professional managed platforms. I wouldn't put crypto in a place or where there's a bit of mismanagement. So this gives everything that you need, right? And then the other plus part would be the crypto efficiency. Like checks demonstrate confidence in the deal quality and market trajectory. These are very important things. And I think I've answered most of the panel questions here. Can keep the questions flowing. We'll see. Definitely we'll be jumping on another call sometime. I don't know what we have. I think Kim, you have to share the schedule in the group so that they know when is the next time that we're having this type of calls. So that's all you know about this the update I needed to give to you as well. Wanted to share a lot more, but I don't know. If we could look at a bit of this is here. Uh, it's not planned, but I thought I'll try to share that with you as well. Okay, 1 quick minute. Let me stop sharing for a bit, then I'll come into another screen, I guess. Uh, where do I go? Where do I go? Apologies on that. So what I'm going to do is